Good morning, everybody. I'm Ed Parcaut, Real Estate Jerky Daily. Mike's still in Washington, D.C. If you don't understand what he's doing, just watch the movie Mr. Smith Goes to Washington. Just kidding. Don't watch that movie. It's boring. But, you know, it was the movie of the time for Jimmy Stewart before he got into the It's a Wonderful Life. All right, so it is kind of, that's funny I said that because it is kind of a wonderful life. We supposedly have a deal in the Middle East. The Dow's up 400 points. SpaceX is now bigger than Meta, I should say Facebook, and that number and that stock price keeps going up and up and up. All right, what else do we have today? Just real quick before we get going. We have the rates are better by 4 basis points. Not really shocking anything. The 10-year sitting at 4.44, which is higher than it was probably a year ago, but our rates are lower than we were a year ago by at least 1%. So, again, what is it today? Tuesday, June 16th. Wow. Where did the year go already? We had am I slowing down? No, I think I'm fine. Yeah, I'm okay. All right, here we go. Stocks, like I said, are higher. The bonds, like I said, rates. And oil is cracking the 80. We're at like 77 the last time I checked for the pricing of the oil, which is good because we started the war at 67. We're $10 away from that. And as things keep going down, so does the gas prices. And eventually, except for California, they're going to find a way to raise it and then still blame Trump because we never do anything wrong in California. It's always everybody else's fault. It's not ours for what we do. And that's what we need to change in this state. Take some responsibility for our own actions. The deal is still on track to be signed in Switzerland on Friday. Supposedly they signed it electronically today, but they're going to have the formal thing in Switzerland on Friday. The Strait of Hormuz is set to be fully open with no tolls. There are reports that Iran may still try to charge a service fee, almost like protection money to cross, kind of like the rackets in certain places to protect you. We don't have the concrete deals, and I don't think we'll ever know what they are until after it's signed. It's kind of like that the Obamacare. Have no idea what it is. Just sign it. We'll figure it out later. Gasoline is around $4.04 a gallon right now for regular. Not here in California. As oil keeps going down, they say it's going to go to $3.30. Not here in California. That's a huge drop for 74 cents. But let's just move on. Because, the gas prices, everybody's like, why hasn't rates dropped? We signed the deal. Everything's changing. Well, there's still the reports that show inflation because of the oil prices isn't just going to go away just because they signed the deal. It's going to take a few more months for that to happen, but we will start seeing that bond go back down, and that's when we're going to see it. Right now, bonds are sitting at the same range we've been watching, supports at the 25-day moving average. There's 2 catalysts. They're waiting for the Fed to wrap up tomorrow's meeting and the peace deal on Friday. If good news on either one or both of them could push yields higher. I don't think they're going to do much on the news when they come out of the Fed. And it's truly their first meeting. They don't want to set the tone that, hey, we're going to be, who knows? I could be totally wrong on that. So let's just move on from there and we'll just leave it alone. And we had 2 things come out today, housing starts and permits. 3 things if you count housing starts and permits as 2 things. We got housing starts and permits there. The real story is the permits in May came in about 1.4 million, right in line with expectations, but the starts fell 15% to 1.18 million annualized pace, and that's the lowest since 2020. And what people don't realize, to keep up with just normal population growth and everything else, we need about 1.9 million homes created a year, and we're nowhere close to that. So we keep adding to our deficit. And that's why if you look at the demand measured by household formations, what I just talked about was last March at 1.65 million formations. So I was off a little bit, but that's typically what the number is. You can see clearly the data demand picked up when rates fell. If you look at January and February, when the rates fell, people jumped on new homes, started buying that. Higher rates in the second quarter knocked down the formations down for people doing it. But hopefully with this peace deal and everything else going on, we're going to see a huge formation start climbing again. On supply, starts have declined sharply. That signals less new inventory coming to the market. I don't know if you knew that, but Yeah, shocking, right? Put it together, rates move lower, demand rises, supply tightens, more people on them, more offers on one property. Kind of like Mike and I have been saying, if you do it now, you're going to be the smarter and just refinance. We've been saying that for a while now. A lot of people keep doing it, and that's how it's going to be. You just have to be okay with that rate for a little bit, because it's going to be there for a while. It's going to take time for it to go down. It doesn't happen overnight. Because, I mean, if you look at builders, they pulled back really hard because of they're building, but they're not building at the rate that they could build at. And they are building out these different places because there's only a few hundred of them, or maybe 500 of them. There's not thousands and thousands. We used to build 1,000 homes a year in Modesto alone, and we're not doing that. We talked about active listings the other day. Oh, do we have existing homes that come out today, or they just... no, we had ADP employment, labor, and the Fed. So on the labor side, ADP weekly employment report for the week ending May 30th. The average was 25,500 jobs per week for the previous 4 weeks. The prior report was at 29,000 per week. So this figure keeps moderating. It's stretched over a month and forecast roughly 110,000 jobs. So that's less jobs were created in the last 4 weeks than the prior 4 weeks. And that could be the productivity. Less layoffs. Yes, they're still laying off in certain places, but because I know Xbox is getting ready to lay off some people if they haven't already. But that's not necessarily things to do with AI. That's not necessarily to do with other things. That just happens to do with the fact that people have kept them on it longer than they should because they thought things were going to change. When oil and gas prices are up, people don't buy as much as they used to. And that's pretty much it. I know it's kind of boring today, but that's really all we have for today. We're going to hopefully see on Friday and by tomorrow with the Fed that things are going in the right direction. And it actually is a wonderful life, as I started the show with, that things are getting better and things will continue to get better. And we just need to stop listening to the news the way that we hear and the people protesting. People protest whether things are good or bad. They're always protesting. That's just what they do. And we just need to move on from that. Anyway, that's all I had today. Not much. We had housing starts and permits. So we had housing permits and housing starts, I guess you would say. And then we had ADP employment today. That's pretty much all it is. The Dow's up, NASDAQ's up, rates are going down, and the 10-year is going down. So that's all positive. All right, make it a great day. I'll be back tomorrow. Thank you. All right, bye.